Cardano has been battered by the bear and keeps getting pulled back by the bears at the $1.30. That's the 382 retracement from its previous all-time high, which is going to be the key level that we need to overcome. We're forming a bullish pennant at the moment. If we break and close above the $1.30, I expect a surge in Cardano all the way to $2 with limited resistance. So we can see this is the full Cardano cycle. You look at the Wall Street cheat sheet, we go through all these different emotions. The market is designed to make us feel this way. The market's designed to make us feel optimism, belief, thrill during a bull market, euphoria when we get to the top of the bull market. Then we get the complacency, then we get the anxiety, the denial, the panic, the disbelief. So where are we in the current Cardano market cycle? We're currently at the optimism phase. This is where I'd say we were. And we're looking for belief. What needs to happen before we get belief? What needs to happen before we get belief, guys? One thing needs to happen. We need a break and we need a close above $1.31. This is the 38.2% retracement from its previous all-time high. We've been talking about this for months. We've been talking about this for years, guys. We expected this 382 to act as strong resistance. It did act as strong resistance. And now we're forming this bull pennant, this bull flag. So how can you play this, guys? Simple, simple, simple. All we're going to do is we're going to jump into the lower time frame. This is the 4 hour, and you can see we've got a bit of a trend here. We can add in our trend line, and then you're waiting for a break. This break is going to be the confirmation. Once you get a break and a close above, that's showing one thing. Momentum's changed. The bulls have regained momentum. They've got enough power to push through the trend line and give conviction. It allows for another thing, guys. Risk management. This is the most important thing. If you get a break and if you get a close, where's your stop loss go? Back in trend rather than below the previous swing low. So what does that do to your risk management, guys? 0.5. It's not worth taking any kind of trade like that. However, if you've got a break and you've got a close, you can reduce your risk to reward and then protect your capital, guys. It's all about risk management techniques. It's all about waiting for the right time. If you wait for the right time, you can get into something with the least amount of capital at risk. So wait for the break, wait for the break. While it's pulling back and while it's coiling, something's happening, guys. The indicators are being reset and the indicators are being reset. So if we jump into the daily, we'll see that the indicators pulled back, the RSI's pulled back, the stochastics pulled back. This is good, guys, because it's coiling up. It's a tug of war battle happening. Sometimes people have got more momentum than others. The bears at the 382 had more momentum. They pulled price, pulled price, pulled price, pulled price down. Tug of war battle happens within these trading patterns, within these trading flags. So at some point, we're going to get a clue in the market. At some point, we're going to get a clue that the bulls have regained momentum. That clue is going to be the break. Bears push price back down here. Bears push price back down here. We know when we've got momentum, once we've got the break and the close. Once we've got the break and the close, we know that we can protect ourselves. If we protect ourselves, you can get into something with the least amount of capital at risk. So that's the aim of the game, guys. This is the $1.30 that we need to break and close above. Now, this is the key level that I'm showing you, all the way to $2. We've got our fib retracement. Remember, we've got the reaction from the 382. You've got your 0.5 in the middle, and then you've got your big 618 up here. Now, what I want to do is show you the build-up of price action, or in this instance, the lack of build-up of price action between this area here. Between the 0.5, or the 618, sorry, and the 382. There's a lack of build-up of price action. You haven't got much price action here at the 0.5, so that's showing. Because of the lack of build-up of price action at this area, people are not going to be putting their sell orders at the 0.5. The 0.5 isn't even a real Fibonacci number, guys. The 0.5 is something that does act as a sticking point, but your main Fibonacci is your 382, 618, guys. So what I'm saying is, because there was nothing here, once you break and close above here, expect a big push in price all the way to $2 on Cardano. That's what I expect to happen, guys. So wait. Appropriate risk management's key, first and foremost. You've got a break and you close above the $1.33. Once you get a break and a close above $1.33, that's signaling you go all the way to $2. There's a high probability you go all the way to $2. In the shorter term, you're going into the 4 hour, and then you're waiting for a break, you're waiting for a close above. Once you've got a break and a close above, you can enter before the 382, protect yourself with a limited stop loss, and then try and ride the break. So that's how I'd be playing the Cardano game, guys. I do like Cardano. When you look at Cardano in comparison to Total 3, you'll see one thing. Total crypto market cap is testing the previous all-time high of Total 3. That's signaling the start of my alt season. When I get the start of my alt season, I'm going to start scaling out of my positions over a period of time, over about 10, 15 week period. So when you look at the Total 3 testing its all-time high and look at Cardano, Cardano is nowhere near testing its all-time high. Cardano is testing its 38.2% retracement. which is a lot further back. Cardano's got a lot more to catch up. So you would expect that surge. You'd expect that volatile move once you get a break and a close all the way to $2. Right, guys, let me know in the comments what you want me to cover next. Don't forget crypto class tomorrow. It's going to be an important one on support and resistance, how you can apply those magic or not so magic trend lines to your chart with ease. So stay tuned for that one, and I'll see you tomorrow.